All right. Now we will be doing a very, very good practical of what we've done in the other video. In the previous video, we actually spoke about how that I spoke about analysis for time frames, right? I'm trying to sound natural. I'm not trying to sound super dupe. I want to sound as natural because that's a very good way you can get to connect with me and learn this thing as fast as possible. I want to understand that the person who is teaching you is a natural human like you who understands these concepts and is willing to share these things with you. The last video I uploaded, I spoke about how to analyze across different time frames, and now we will be doing a quick snapshot of that. Okay, so I want to use erasers because I think I used erasers in that video, right? Okay, so I usually start out this way in my analysis, and okay, if I remember, I used 12-month time frame, right, as my high time frame. Then I use the 6 month time frame as my intermediate time frame, right? Then I use the 3 months time frame as my lower time frame. So let's start from the higher time frame. I'm using this just to like help you. Yes, that I want to say this, please. When you are learning time frame analysis, how to do, they call it top down analysis, some people call it time frame analysis, whatever you want to call it. I will advise you. For me, when I was learning this thing, what I did was that I use higher time frames to practice because higher time frames don't move that fast, so they move slowly. So it gives me time to like always reanalyze and get myself. But analyzing on time frames like lower time frames, they have some speed. You get, like, let's say the 1 minute time frame, for example. Now let's look at this. On the 1 minute time frame, you can see that this forms every 1 minute. All right, and so sometimes you might analyze, and the speed might not permit you to be able to internalize what you are studying. It's usually best that you go down to, let's say, go to a higher time frame. Okay, so I'll usually use a higher time frame to study because it's not that fast, so it gives me time to internalize things. So in starting out my analysis, like I said, the higher time frame is where I want to know my key levels, right? My key levels. That's also where I want to know my So these are my key levels already that I'm crafting out already. Do you understand? So I'm crafting out my key levels already. Yeah, on the top of the apex, please. Then this is that. These are my key levels, and the reason why I'm using these key levels is because of the fact that they are still fresh. I could still use these other ones. Do you understand? I could still use these other ones, but they are not as fresh. I don't feel like they are as fresh as the other ones that, because if you see all these ones, they've been traded through, or like you can see price has passed through all these lines we're seeing here. Unlike these ones that are yet to have lines price pass rate. What about this one? Yes, price has passed through this level, right? But it could still come down to bounce on it, so it's still okay. But unlike this one that it has passed through severally. Okay, so the next thing I want to do now is to determine the direction. Okay, so how will I determine the direction is that, first of all, let me delete all the key levels I've drawn. I just drew that so that you can see it. But always try to make your chart as clean as possible, okay? Now, let's look for the most recent break of structure. Okay, the most recent break of structure happened here. Do you see this level here? It happened here. So on this level, because can you see this guy, I'm putting my mouse over. This guy was supposed to, you see the way the guy came down here, right? You see this apex where my mouse is pointing to. The guy ought to have continued going what? Upwards. From this point, ought to have gone upward. Done something like this, you get, and move up. But instead, the guy was weak, so weak that it came crashing beneath what? Beneath this level. Do you understand? So that's how we spot our market structure shift. So the most recent break of structure happened, or let me say the most significant break of structure happened on this level. Okay, so in fact, that could even be one of the key levels I may be taking note of, most importantly. So for it to have come down, that is a bearish market. So it shows that this asset is quite bearish since what day? See where my mouse is pointing to? Since January 2013-14, it has been bearish down. That year, it has been bearish down. So this is a 12-month time frame, yearly time frame. So you can see how that when price came through it, you can see how that when price came back, price just bounced. It just stayed beneath the level. It couldn't go above it, so it became a resistance level. So we can see that from this point where I'm drawing, where I just marked out my box, okay, the price has been what? The price has been in a downward trend. You can safely conclude that the price has been in a downward trend. Do you see how I just determine my bias, my storyline, my direction? It has been bearish. It went back up. Okay, it is still bearish. It is still bearish. So the only way I will know if this is bullish is that on this early time frame, okay, it is still bearish overall. But at the moment, temporarily, it is bullish here. Temporarily at this moment, where my box is, it is bullish at that moment temporarily. But overall, from this point, you understand, it has been bearish. Okay, so now why is it going upwards here? This upward movement you are seeing here currently, that is currently bullish. Okay, that is where we are going to capitalize on our lower time frame, like the 6 month time frame, okay, and our monthly time frame. So within that region, we'll be capitalizing on bullish movements. Do you understand? But overall, for the yearly time frame of AUSD, it has been bearish. So it's that simple. This is how you analyze between higher time frame, lower time frame, and medium time frame. You get. Then now, so the question is, if this guy is bullish, currently bullish, and we know that the overall trend is bearish. So the question should be in your mind: when will this temporary bullish movement end? Do you get now? I hope you are getting it now. So it could be that when it gets to this level here, somewhere around here inside this box, all right, inside that box, somewhere there, it could be that when it gets there, it might give us a break of structure down on, let's say, the monthly time frame. So it might give us a break of structure inside the monthly time frame that will reverse it downwards. Then on the 12-month time frame, then we should see it coming downwards. That's if it's going to reverse. But if it will not reverse, the market will also let you know that it will not reverse by also showing you a pattern. And that pattern is that on that same monthly time frame, instead of you to see a break of structure that will reverse to the downward side, rather you will see a break of structure that shows continuation to the upside. Do you get? So I know I told you that there are two types of break of structure: one for market structure shift and one for continuation. If you watch the previous videos, you will see they are explaining those things. Then so back to the 12-month time frame. So far you can see that I've quickly determined my bias and my market direction. So I know that temporarily the market is bullish, so I can still be buying, but I'll be very careful around this region. So either sell downwards if it gives me a sign to sell downwards, or to keep on buying upwards if it says okay, you can keep on buying upwards. So I know you want to probably see what it looks like on the candle charts. So let's check it on the candle charts. Bam. So on the candle chart, this is what we're seeing on the candle charts. These are the levels of the candle chart. So it's likely that this guy, well, I don't, from my own feeling, I don't know. It's okay. It's not from feeling though, but from the way I'm looking at this thing might not bounce downwards. It might actually break this. It might actually break it and it might actually break it and move upwards. And the reason why is that you can see how that these candles have closed above this level in time past. They've closed above this level in time past. Okay, so it might actually break it and keep on going forward. But what we need to know without too much further ado is that at this point in time, it is actually what bullish at this where this guy is. So also let's take note of this level, because you can you see this level as well. This break of structure. This is a break of structure, mind you. So that is the most recent break of structure. So it's a break of structure because you can see that this an apex, price went above it. You get. So now, having known that, what else do you want to know again? Now, okay, yeah, this is what I usually do. This is what I usually do. Okay, this is what I usually do. Let me show you. Now, we've known already that it is what bearish overall, but currently it is what bullish. We're still on the higher time frame, so we've determined our direction. Now, if I want to stress it by putting more details into my mind, like fishing for more details, I want to ask myself, if this guy is overall bearish, when should this guy end this temporary bullishness? If this bullishness is going to be temporary, when should it end it? Now, the truth is this. How best can I make this easy for you guys? Okay. Now, did you see that this high was the one that broke this structure downwards, right? You can see that, right? That this guy up here, this guy was seeing here. Let me point him out. This guy where I put my box, right? That guy is the one responsible for breaking this structure below. Okay, so this guy here was one responsible for breaking the structure below, right? So now, when this guy actually broke this guy below downwards, we should expect that price will not just fall down flat. Price should actually have gone back up a bit. Back up a bit where? So somewhere around here, inside this, around this region here. Do you know why? I'm doing too much analysis. God, I don't want you to lose it. Do you know why? I'm drawing that box here? It's because if you observe, there's a level here. Bam, do you see that? So I'm not even using my Fibonacci tool yet now. I'm tempted to use it, but I don't want to use it. So price also have probably come back to this guy and bounce downwards. Do you understand? Price also have come to this guy here and bounce downward. On your candle chart, let's see what it looks like. So this level is still fresh. So price can come and clean up these guys you are seeing here to go and tap this guy and probably start what's coming downwards. Let me show you what I mean. Price might still go up like this, tap this guy, then come down. And when it comes down, do you know what price should do again? Price should come back up like this again to tap this guy here. Then what? Come down. Tap this guy here to come down. That's if price want to keep on plummeting downwards. Do you understand now? Do you get now? So so yeah, so I'm trying to sound as natural as possible. Okay, so what I'm expecting, all right, is that price should actually come back up to tap this guy, because this guy has not been touched. You can see that this level is still untouched. If I remove the box, you would see it. So for a long time, it might be that maybe for the next couple of years, it might be that Euro USD should be rising higher to this level. Do you understand? All right. So what else again is that? Yeah. So we've determined that the price is bullish, and also I've gone to put extra effort to show that the price might actually be bullish for a long time and not just temporarily. So having known that the price is bullish, then I'll just narrow my focus down here. Okay. Then what will I do is that I'll come to my lower time frame. Let's say like the 6 month time frame. Let me see if there's anything I want to find on my 6 month time frame. So now on my 6 month time frame, what I want to do, I want to still see if there's maybe a detail I couldn't pick up on the higher time frame. Do you understand? So okay, I can refine this level to this place. All right, can I put it here? Okay, let's see. So now I'm on my intermediate time frame now, right? And what are we seeing? Okay, yeah. Price is going upwards, right? Is there any, okay? Is there any? Let me see. Let me put on my candle chart stick. Let's see if I'm missing anything. Okay, so this is a break of structure, like I told you, from the higher time frame. Let's go back again. Let me show you. That's it there, right? So if I put this line on top of that, so let's have that place. It's a recent break of structure, a recent bullish break of structure to the upside. So that's it. So now on the 6 month time frame, let's go back. Now you can see it how that it broke the structure. But however, let me tell you something. Do you know why I'm not really prioritizing this break of structure? Why? It's a break of structure, but I don't like that kind of break of structure, like, because the high that formed this low. Let me show you something. See this low that is here. You see this low where I just drew this small box. See this low. See that low where my mind is pointed to. The high that formed this low is not this high. This high where my hand is pointing to. Okay, let me put it on line chart. This high where my hand is pointing to was formed after that pin bar low we saw down there. This high we're seeing here was formed after this one. So normally this high was the last high that formed this low here. So normally I should be expecting my mind to see this guy, okay, being taken out to confirm that, okay, there has been a break of structure, because by the understanding of ICT, okay, you see this guy we're looking at here. This guy is still within a range. It's still within an area. It has not actually gone above this guy. So until this guy here is broken above, do you know why? As I said, because this is the high, all right, that formed this pin bar low here. Okay, so until that guy is broken above and you have a candle like this closing above this guy here, then we'll see that, okay, fine, there has been a break of structure on this 6 month time frame. But however, on the 12-month time frame, let's check it out. So you see, it's almost the same thing as well, just that the data is now shrinked. So it would have been much better that, okay, this guy over here was broken, because this is the guy that formed this low here. Do you understand? But I'm sure you are getting I'm sure you understand it, and I hope it's not confusing at all. Okay, so what else again? Back to our 6 month time frame. Back to our 6 month time frame. Now, the next thing I want you to understand that, okay, why would this guy have formed the break of structure here? Is that this low we're seeing came from somewhere around here. Somewhere around there. If you check the monthly time frame, you will see this. Now I kept it here, but it didn't reach that line particular. If I did look at something, you will see that the tip of this candle here was what coincides with it. So these are reaction points, key levels. Do you understand now? And yep. So on that level was where you have. I'm trying to remove this line so that they won't be excessive on the screen, so you won't have too much thing to pay attention to. That's where that break of structure happened. Okay, now, however, now listen carefully. However, you know, now this is why you have to use a small time frame. Now, like I told you when I was on that 6 month time frame, I told you that by the understanding of ICT concepts, I would prefer to take this guy. This guy was seeing here now inside this box. Okay, it's also a break of structure. Do you understand? But it is preferable that you wait for this guy for price to pass above this guy to the right. You know why? Because this is the guy that formed the low that you are seeing here. This guy formed the low. This high has been broken, but it's still within the range of this high to this low. It's still inside that range until we get out of it. Now I've broken the structure. Now you might be on the 6 month time frame. You're waiting for a break of structure. You're waiting until this guy here is being broken, right? Right, because this is the high that formed the last low here. However, if you went to a lower time frame, and this is the beauty of using lower time frame to also analyze, that's why you have to know how to go back and forth. Now, while you're waiting for this guy from the 6 month time frame, that guy, I think that guy too is also as well on the 12 month time frame. Let's confirm. Can you see also that this guy is on the 12 month time frame? We are waiting for price to come and break this guy to confirm that a break of structure has properly occurred. Even though we know that there's a break of structure inside this place, but by ICT standard, we are waiting for this place to get broken. Look now on the lower time frame, which is for us our monthly time frame. You can see how that while we are waiting for this guy up there to get broken, guess what? On the monthly time frame, there has already been a break of structure way ahead back. And where did we see that? Look at this level. Can you see this level? Can you see this guy here? You can see what happened. So this guy we're seeing here now, this is the last high that caused this low here down here. You can see this high here caused this low down here, and the moment price broke and closed above it, that was when we had the break of structure on the monthly time frame. So if you're on the 6 minutes, if you're on the 6 month time frame, you may not have spotted it. Let me show what I meant. You may not have spotted it. Look at. Can you see? Can you see? You will just be seeing just a rejection pin, but you know that on the monthly time frame, which is your lower time frame, that you have actually they've actually been a break of structure. So the best way for following ICT standard, okay, following ICT standard, okay, them and also Malaysian as well, is that this high until it is broken. If you see another high by the right, let me explain something for you. Let me explain something. Let me use a replay button. This video might be very long, and I think it's for your own good. It's for your own good, and I'm not rushing it. Please subscribe to the channel, like it, alright? Comment. Now, if you see price did this is a break of structure. Do you understand? However, wait until it comes and break this guy here. Do you get now? That's when you can say, okay, there has been a proper break. Because if you see, If you say, oh, I've seen a break of structure here, I want to start buying. Price may do this. You may not know. Just do that and go back down. So now what you will do is this. You will just wait for a proper break to break here. Alright. Now when you see this occurring, if I should play it, let's see what happens here. So yeah. Now let me pause this thing quickly. You see these points where this candle itself, this big long candle closed above this P21. It is also a break. You can also use that as a break of structure. But ICT might not really teach you like that. I don't know. But for ICT standard, you have to wait for this guy, that high over there my mouse is pointed to. But for me, if I see this right now, I can still take it as a proper break too. So just understand how this thing works, alright? Understand how this thing works. Okay? And why did I say this long guy will be a break for me is that you can see that this long candle where my mouse is pointed to closed above the high of this candle, this smaller blue candle. Do you understand? The smaller blue candle to the right, to the left, you can see how that long candle closed above it. If the candle was still forming, let me explain. Can I go back a bit? Can I go back a bit? I don't know. So now, this candle is still forming. So until the candle forms, okay, let me explain. You see this candle forming? You see this candle forming? Until this candle forms finish, that's when you make a decision. Now, it has formed perfectly above this level. Then there has been a proper break of this level, of this structure here. Do you understand? So, what do I want to do? Yeah. Okay. So that's it. Then now, for the entry, right? For the entry. So if you remember in the other video, I told you that you will have to this is the lower time frame we're dealing with here now. Lower time we're dealing with here. Then you have to allow price to come downwards here, somewhere here, for you to buy at a cheaper level. If you want to use your fair value gap for ICT, you can just draw that gap that is there. But it's been a long time I use fair value gap. I don't really use those things again. So what I do is that I just pay attention to levels, or I could use my Fibonacci like this. Okay. Then just target 50% of this level, or here. Do you understand? That's all. Then probably put my, let's say, my position somewhere here. Put my stop loss beneath here. Okay. Then target somewhere like here. You could still target. Now you could still target maybe a place like this. You could still target a place like that. Okay, let's check the higher time frame. The higher time frame. Okay. So like I told you, this guy might just be coming to aim this place, right? So I could just keep it there because it might come to aim this place to come down finally. So I could just keep it there. Do you understand? What else again? Okay, you can see it has entered. It has entered. If you don't want to use fair value gap, let me explain. If you don't want to use fair value gap, or let's say I like told you, I don't really use fair value gap again. Just have to understand that price has to come down a bit. It was Fibonacci I use mostly. But if you don't use it, you can actually pay attention to these key levels. See these levels you are seeing here. That's one. And do you know what? Do you know why I actually use that level? Because it's also inside a fair value gap. Even though I'm not really paying, it's a kind of subconscious thing. So I may not really reinforce it. You get, but somehow I'm making use of it. It may have even come down to this level here. To this level, it may have come down to that level. It may have even come down to somewhere here. Do you understand? But most likely to mostly be here or here. And the question now, how you will know if it will come down exactly to this level depends on certain things. You might have to go down to another lower time frame. Now let us have the mercy of going down to the weekly time frame just to satisfy our curiosity. I'm just doing this in like a freelance thing just to help you understand how this thing works. Now on the lower time frame, like the weekly time frame, now I'm going extremely low now. Can you see that there are other levels inside? So you will find that even the fair value gap, sometimes you might not even bother using it because you even have other juicy things to pay attention to. Look at this level. Is that not exactly? Let me remove this our whatever. Look at on the lower time frame, weekly time frame. Can you see where exactly that guy came down and tapped a level? He may have even come to this one. Anything could have been possible. So at this point, when it came on this level here, because look at there are two levels here, right? 1, 2 from this thing we just did now. So you may be asking me, which of them will I pick? Which of them will I pick? How you will know the one to pick is that you just observing it, and when price comes to any of them, if price gives you a market structure break to go to the upside, then you pick it. If it does not give you a market structure break to go to the upside, wait for it to come down a bit to this level, then to give you what? A market structure break and go upstairs. Okay, what if maybe it gave you a market structure break on this level, this first level here, and if it knocked you out and came down here, enter again and fly up. Be not afraid. Oh Jacob, be not afraid. My name is not Jacob, mind you. I love what I do. All right, so what else? What was the next thing now? Okay. Now, how do we spot the break of structure here? I think my network is seizing. Oh God. My network is seizing. Sorry about this. Let's give it let's wait a while for it. Okay. So now inside this place, that's why you'll be anticipating your break of structure. Let me reverse the chart a bit. Is it possible? Is it possible? Now, are you ready? So I'll play it now. Let's wait for it gradually. Can I reduce the speed a bit? So now observe clearly. Bam. So the moment this happens now, can you see? The moment this happens now on this level, where my attention will be. By now, you should understand how I arrived at these key levels from the monthly time frame down to the weekly time frame. Right? So now, because remember that this guy here, remember that we entered trade for me, went up, and now I'm going down to the weekly time frame to like expand it down to a more microscopic level so I can see more in detail. Now if you come back to this place, you can see that there were some levels on the micro level, on the microscopic scale of the weekly time frame, which is way lesser than the monthly time frame. We saw some two strategic levels. And why are these levels that important? Is because these levels are important because these levels are the ones that were formed before this pullback. This guy too here is a brick of structure, mind you. This guy too here is a brick of structure where my mouse is pointing to right now. But why I will not really prioritize it is because it was formed after this major high that formed this low, after this one that formed this low. So it's more like sometimes I work with the ones on the left and not the ones on the right. I hope you get it. So at this point now, I'll be anticipating and waiting, okay, let me see what the price will do. At this point now, do you know that this is the most recent high formed? Come to your, can you see now? Bam, I put my stuff there. I'm watching out. Okay. Let me delete this guy. Okay. I'm watching out. So now at this point, let me delete this guy. So now at this point here now, all right. I'll watch. Let's see what happens. Pause. Just wait. Calm down. Without ICT, if I don't use ICT, you see the way this big guy is forming right now above this smaller one. This is a brick, but the brick has not finalized because you can see that this big candle has formed above this smaller candle here. Can you see? Until this candle finishes formation, then I'll confirm that okay, there has been a break on this level. I can even enter from this place and fly up. But if you want to be patient enough and maybe you want to use ICT, you have to wait for this candle to form and break this level up here where I am showing you this A. And the reason why I'm showing this A is by the virtue of application of Malaysian SNR combined with ICT. I have a way of mixing this thing together. Now let's go together. Let's move. Now you can see that it came back to this level. At this point in time, I may re-enter the market. I've not seen a proper. Now by ICT, will not enter yet. Will not enter by ICT. By ICT, you will not enter yet for a buy because it has not broken this place. This A you are seeing here, all right. Or even and also by Malaysian as well, you will not really enter yet because this side has not been broken. So now let's watch. Okay, let's watch. Let's see. Where's the play button? Let's watch. Boom. Did you see that? At this point, there has been a break of market structure by ICT standard. But if I don't want to use ICT standard, I could have still entered from this place quickly and follow the ride along. Do you get? Now, at this point now, I will not enter a buy straight. I will wait for price to come down a bit beneath this breaking. To come down somewhere where? Let me explain. Somewhere around here. You can see I'm just random guessing drawing this thing. Do you know why? Because I'm used to the range already. But if you are not used to the range, you can just use Fibonacci by drawing from the lowest points. You can see the lowest points to the highest points, which is here. Then maybe you may be targeting, let's say, this 50%, this 50%, or this lower one, or this lower one. But if I don't use Fibonacci, I can just use my ordinary eyes and just put. But if I want to just help you, I'll go to line charts. Do you understand? Then these levels we are seeing here, any of them should come and bounce on any of these levels to fly back up. If it does not bounce on this level, it might bounce, let's say, somewhere here and fly up. Okay, so let's see what happens. Is it going to come down? I don't know. Sometimes it might not come down. Okay, it didn't come down. It didn't come down. And it just kept going upwards and upwards and upwards and upwards. Right? And upwards and upwards and upwards. So that's how we're able to profit from that. So you can see that from this small place we see here, you can see that definitely there was a way you would have gone down to the lower time frame to have picked more details. Now, do you know that if you go down to the daily time frame, you will still find a break of structure inside this place as well for you. So let's keep it here. Now let's go to daily time frame. Can you see also? And even in the daily time frame, remember that all these levels are from the higher time frame of the yearly time frame. Now, in the daily time frame, can you see that if you put on your line chart, this guy here was the last high that was formed before this guy you are seeing was the last high that was formed before this low. You can see this one too, right? But I want to take this one. I want to take this one properly. I could just put my line there. Can you see? Oh boy, it's too fast. Now, at this point now, you will be like, okay, so your mind will be breaking above these levels. All right, you could still take this guy. See, this guy was the last high before this last low. You could still take this guy, but due to my preference, I may want to take this guy here. This one's up here. So let's see what happens. Until it closes above it. So it has closed above it now, right? It has closed above it. So we'll try to see if it's going to come down. Let's say somewhere around here. Like if I want to use this box by just drawing randomly. Or if I want to use Fibonacci, you draw from the lowest pin bar here, the highest pin bar. Okay. Then you look for 50% or little. In fact, this Fibonacci, I'm not even teaching you how to use it perfectly. I'm just using it sparingly. But there's a perfect way to use it, which I will create in another video later on. But just get the flow of it. So if I want to use my line chart to just quickly know where to put my expectation level for retest, I can just put the line here. I could put it there. I could put it under here. That's if it will come down to that level. Or it could just bounce from here and fly up. But let's see what it does. Let's see what it does. Right, alright. Let's see what it does. Okay. This is what just happened now. It came down here, down to this level. You can see it's a key level. You can see how it's reacting. Let's see. So on the line chart, you may not see all those details. That's why we used to use candle charts. And you know that if you have entered this trade, you will not be in a loss because at least you would have put your stop loss where this guy is here. You see, imagine you put your stop loss somewhere like this. Imagine when you put your entry. I could have put my entry here. Sorry, I could have put my entry here, then put my stop loss somewhere here. Okay. Then place my targets here. You see. But if I wanted to be like I want to just see if I can, because sometimes you could be like, okay, I want to place my entry here. You might miss the trade. So that's why sometimes I just use a very, very short price. I know that the price must surely touch. Then later, the thing is this: be very confident about. Try your best to know where price will never get to, no matter what. Then put your safe zone there, like put your stop loss there. But ensure that it's not too what much. So let's see what price does now. Now this thing it did there was also retrace. It's going to go up. So at this point you could enter your trade. You can enter your trade around this area. Then, so I'm not really teaching entry yet. I'm just teaching you how to follow this analysis from higher time frame to lower time frame. So I'm sure you've gotten a lot of insights. So next videos now I'll be focusing on how to take things like perfect entry, how to exit the markets, and how to use things like Fibonacci to know how it really works. Let's see what this guy is still doing himself. Okay. You can see. So it's just okay. Let's see. Okay, I'm still curious. It's not like I've really. It's not like I've not been on Euro USD chart for a very long time. So the way I'm doing this thing, I'm doing like someone just give me the chart and say, okay, look at it. So one of these days we're going to do a live. We're going to do a live webinar on YouTube here, where people just say, okay, Levi, let's check out assets. Then when I check out the asset, you will see how natural it is for me to even first of all find challenges, then take my time to analyze, then finally come to a decision. It's not like I knew the answer somewhere from Mount Sinai. No, I take my time to look at it, and from looking at it, I know what's happening. All right, so yep. So let me end it here. Thanks so much. Like I told you, subscribe to the channel. Like, subscribe to this channel. Subscribe. Let's check it out. Subscribe. Tell your friends. Share it to them. Tell them that you are learning something. And also, if you have need of having a group physical class, if you need me to have a physical class with your friends, you can always reach out to me. Then learn something together. So,
hello and good morning. It's Levi Thunderstorm.
All right, thank you. Okay, guys.